All right, everyone. So I'm going to give you a game plan for the week ahead here. I'll be in my office tomorrow morning, bright and early. In the car, in the car right now. I'm still kind of getting over this cold. Anyways, so last week things finished with some serious momentum. ABTX. I mean, this thing ended up closing on Friday at a 364% gain, but it went all the way up to a high of like $35 a share. Now, let me caution you from feeling FOMO on this. Some of you are like, "Oh my God, this went to 35. I can't believe I didn't, trade all day on Thursday. Sorry, not Friday, but Thursday." But let me just, give you kind of a dose of reality on this. Although it went up, it was not super easy to trade. And you can see the way I can know very quickly that something wasn't easy to trade is when I see a lot of topping tails and a lot of bottoming tails. Because what that tells me is that it was very whippy. It was popping up, it was dropping down. It was popping up, it was dropping down. And it would have been very easy to get caught on the wrong side of the trade on this. If we look at the 10-second chart, you'll see just how big the range was on some of these candles. So I wouldn't feel bad if you missed it. Even going into the close here, I mean, this is a candle that dropped 2 points in 10 seconds. So, these are 2 points in 10 seconds. These are huge ranges. And this actually is a really good example here. Look at how when it started to pull away, it popped up and came back. And then it popped up, pulled back. Right? All these topping tails and bottoming tails, that's not a super clean move. Now, the thing for me that's always a little tricky is that I've really trained myself as a trader to be so focused on generating income that I want to minimize my risk as much as possible. I want to get in, I want to get out. I want to get in, I want to get out. I don't want to overstay my welcome. And I'm not good at, for instance, pulling up a chart like this and saying, I think I'm just going to buy off of this blue line right here and just set my stop down 15, 20 cents and let it ride. I've never been someone who can just let it ride in a trade, which, during COVID with all the meme stocks, it was kind of embarrassing in a way because, I would trade these stocks like GameStop or whatever, and it would just keep going higher and higher and higher. And I get in and I get out, and I get in and I get out. And it was just like, wow, I'm really making this like more complicated than it needs to be. I would have done better if I had just bought and held. But that was a very particular market. Generally speaking, I learned to trade during a period when the market was not so forgiving. It was not so easy. And where if you didn't pay yourself when you were green, you had a 80% chance of losing everything that you had on the trade. So you learned, the market taught you to pay yourself. In some markets, though, I've realized that you can get away with holding a little longer. And I'm not good at that. So anyways, ABTX for traders that held a little longer and just kind of stopped looking at level 2 and stopped focusing even on the 1-minute chart and just kind of let it work. Sure, it put in a nice move. But for the rest of us who have learned what can happen when that strategy goes the wrong way, it probably was a bit more difficult. So, that was ABTX on Friday. That was the last stock that I was looking at. And Friday for me, and this sort of goes for the whole week. I felt like something I was doing quite a lot of last week was I would step up to the plate, I would try to get aggressive, and then I would just sort of like stall out. I had several days where I was up $3, $4, $5, $6, even $7,000, and I was like, okay, here we go. It's time to step up to the plate. It's time to lean in, and then things would stall out. So, that kind of left me feeling a bit frustrated at the end of the week because I had a red day on Monday and Tuesday, and then Thursday and Friday were just small green days, and I really didn't have a lot to show for the week. I just felt frustrated. So something that I was thinking about a bit on Thursday night and on Friday morning, I was thinking a little bit about my strategy in general and kind of the way I've been trading. And I was sort of asking myself, is there something I should be doing to adjust for the weeks ahead? We just came to the end of March. And, for a lot of us, March was not nearly as good of a month as February. February was phenomenal. A 6-figure month for me, about $116,000 of profit. And then March, it's like I kept stepping up to the plate, and I kept kind of, a swing and a miss. Like that just kind of was the theme for the month. And and then that combined with a little bit of frustration, from a few days where I got frustrated from, look, you can only lose at Monopoly so many times before you're gonna flip the board, right? You just like, I'm losing it. And that's kind of what happened to me a few times in March. I just got so frustrated after like my 8th consecutive losing trade, or my 8th time getting stopped out and then watching the stock go higher, that I a couple times was like, you know what, I'm just gonna hold this. And then you know what happens when you do that. So okay, so now we're all coming to a brand new month here. That's great. We get to start with a clean slate, and I think you should think of it that way. I know, even if you like, let's say you were red in March. It doesn't matter how much. Well, let's say you're red. You might be coming into April thinking, I need to make back, X. I would encourage you to throw that thought out the window completely. Here's what I would say. March is over. March is done. As traders, we are thinking about our profits in terms of, I mean, ideally want to be green every day, but we know that never happens. Want to be green every week. We want to try to be green each month, and want to try to be green each year. So if you have a red year, then your only goal for the next year is that it's green. It's not even about really how much you make or making back any of the loss. It's just about rebuilding consistency and being green. So if you had a red month in March, the only goal really for April is just to try to be consistent, and then consistency usually will produce profit. So I would encourage you just to set aside however much your drawdown is right now, whatever your red or whatever you lost at the end of March when it got choppy, and say, April is a new month and I am at 0. And my goal for the month of April is to be a good trader who focuses on A quality setups, who has the discipline to follow my rules, who does not give in to emotional impulses, which lead to days that I would classify as being subject to emotional hijack. And I believe if I follow the rules of my system, and I have the discipline, and I trade A quality setups, that by the end of the month I will be green. How much I'll make, I don't know. That's going to be up to the market. Depends how strong the market is. But as long as I follow the rules, I'll be in good shape. I could tell you, for myself, I would have been in much better shape in March if it weren't for 4 losing days where I lost almost 40 grand in those 4 days combined. That hurt my month, right? I mean, it's $40,000. It definitely hurt my month. So on each of those days, I got stubborn, I got frustrated, and I lost a lot more than was necessary as a result of my emotions. So I think that my biggest challenge that I'm facing right now in my own trading, even after all these years in the market, is emotion, and it's, the anger and the frustration that comes with being in a slow market and coming up short, like trade after trade after trade. Now, that was especially dramatic after having such a great month of February, that things got as choppy as they did for sort of a 2-week stretch there. And although things did start to pick up here at the last couple of days of the month, I wasn't positioned to trade it very well, and a lot of these were higher priced, which I didn't find myself doing well on. In fact, in the month of March, I was net negative on stocks over $10 a share. And now part of that was because I took a $20,000 loss on one trade on a stock that was like, it was the one that I got in at like 15 and added at 17, had an average of 16, and then it dropped to like 12. So, 4-point drop, that was bad. But I had a lot of these stocks like ABTX, which, I made some money on this one, but I also gave back more than half what I made on it on Thursday, because with bigger spreads, you can get yourself into some trouble. So, my sweet spot generally is under 20, but even this last month, stocks between 10 and 20, I didn't make money on because, big spreads, lighter volume, taking too much size, and getting myself in trouble. So what I need to focus on for the month ahead, for the month of April, is being really in tune with when I'm starting to feel that stubborn, angry feeling and walking away. What I can tell you as a tip is that some of my worst days for the month started by me taking full size on my first trade of the day and instantly being at max loss at like 7:05 a.m. Right? So if I sat down at 7 a.m., my first trade was 7:05, and I took it with max size of 15,000 shares or something. I had one trade in March where I did that, and I was down 15 grand on my first trade. It's 7:15. That's a really bad way to start the day. Now I ended up actually finishing that day in the green, up $5,000. But nonetheless, I think that the lesson here and the reminder is that you need to. It's a really important to start with smaller size. So my goal for Monday is to break the ice on my first couple trades and see if I can build my cushion. Now, my daily goal is 5,000. So if I can build a cushion and be up $2,500 in my first like 3 trades, then that's the type of day where the market is on my side. And I should increase share size, lean in, and see if I can make as much as I possibly can during my window, which is from about 7 a.m. to 10, 11 a.m., that the market's hot. And then once my window closes, if the market continues to be hot, I should keep trading, but with smaller size, given that my metrics show me that I don't make as much money as we get into sort of the lunch hour and as we get into the afternoon. I just don't. And so if I take big size during that time of day, I'm setting myself up for failure. So some traders take the approach of, and everyone's different, but I see some traders who take the approach of slamming the first stock they see with full size. And when it works and they're up $3, $4, $5 a share on an algo news spike, it's awesome. I mean, you feel like a hero. It's a real adrenaline rush when that happens. But when you go in with big size like that and you lose on that first trade, now you've got big emotions at the beginning of the day. And you end up often falling into that cycle of revenge trading, chasing, trying to recoup losses, and they can get really dangerous. You can get really reckless with your account on a day like that. And I know from my own experience. So let's just say, for instance, that your full size is 10,000 shares. All right, if your full size is 10,000 shares, that's the biggest position you ever take. You probably would have a daily goal of at least $1,000, I would say, maybe even 1,500 or 2,000, maybe even 2,500. Oh my goodness! So if 10,000 is your full size, then what I would do personally is start with 2,500 shares on your first couple of trades, and if you can get yourself up $500 to $700 on those first couple of trades, like 20, 30 cents a share, then all right, the market's working in your favor. Let's lean in and go up to 5,000, 7,500, maybe 10,000 pretty quickly. So the bell curve is like you start small and then pretty quickly scale up. But when do I scale back down? When do I ease off the throttle? So I had this problem this month and a couple times this last week where I took some of these trades and I did not, I felt like I wasn't taking a ton of risk, but then all of a sudden I went from being up 5,000 on the day in an instant back to, up only 1,000. That happened on CZOO on Friday. So, hang on one second. What is it? You did? All right, I'll come help you in just 1 second. Yeah, I'm sure you're fine, bud. Just give us a. It's from all that coughing. I'll be there in just a second. Okay, so, so CZOO, right? So this one, so I got a nice trade here up to 20, and then it drops, and then I gave back right here when I thought it was going to break 20, and then it flushes. And I didn't think I was taking too much size, but I ended up misjudging that. So I do think it's important to scale down. I generally say once I've given back like 10% of my profit, that's the point where I'm just going to say, you know what, I've given back 10, 15%. Let's just walk away here. Like I'm going to keep as much as I can. I'm going to keep trading until I've given back a little off the top. But in this market with some big whips, I sadly gave back, 75% off the top a couple times in like one trade. So I think what I need to do, to be honest, is the bell curve maybe right now in this market, I have to dictate based on time of day. That just at a certain time, I drop my share size back down because I'm coming to the end of my window when I do well. And if I take a big loss at the end of my window, there's almost no chance of recouping it. So starting with small size, whatever that is for you, increasing quickly to full size, and then as you're getting to the last like hour of your window, scaling back down, bringing it back down and cooling off. So if we look at our continuation scanner, GCTS, we had some huge moves on this one. Part of me wonders if we're going to get more on it. It's still setting up in a way that I could see some more opportunity. So we'll keep an eye on this one. I think my charts are not loaded quite right on this for some reason. CZOO. This is another one that I will keep an eye on. But to be honest, I haven't been doing as well trading off of my continuation watch list. Where I've been doing the best is really on, in the last couple weeks, is on fresh momentum. It's a fresh stock. It's a stock that hits the scanner and goes crazy. That was ABTX. That was CZOO on day one. GCTS on day one. So I think I'm just going to focus primarily on that. There's definitely a lot of momentum that's back in the market. There's also a lot of attention in cryptocurrencies. I saw people talking about the Costco hot dog or whatever it is, MFER, a couple other meme coins that are getting really like hyped up. So the exuberance and the FOMO and the greed and all of that is definitely back in a big way, and in some areas of the market, aspects of the market, to the extent that we see that in small caps. I think we did see it in February. I don't know if that's going to come back in here soon, but with these couple of moves that we saw during the week, I wonder if maybe it will. So anyways, I think my game plan for tomorrow is the beginning of the week. And beginning of the new month. We're all starting at 0. So I just want to start by trying to build my cushion. Get in, get green, try to build my cushion. Once I get myself up 1,000, 1,500, 2,000, lean in, increase size, come up to the $5,000 daily goal, ease off the throttle a little bit. If the market's super, super hot on a couple of these days, I'll try to lean in, but I probably won't do that too much until I first built a cushion. So that's the game plan for tomorrow. I will be streaming bright and early, so I'll see you guys, 7:30. We'll see what the market looks like. I'll be checking it at about 6:45 on my scans, but as long as things are looking pretty good, I'll be stepping up tomorrow morning and looking to start to build that cushion with a couple of trades, and then if it's looking good, I'll lean in. All right, so thanks as always for tuning in. I hope this has been a helpful game plan. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you bright and early tomorrow morning.